Ever wondered how people actually make money from the stock market? Is trading just gambling, or is it a real skill that anyone can learn? In this video, I will explain trading basics in the simplest way, so even beginners can understand it clearly. Trading means buying and selling financial assets like stocks, forex, or crypto to make profit from price movement. When you buy at a lower price and sell at a higher price, you make a profit. When you buy at a higher price and sell at a lower price, you take a loss. Trading is not about luck. It is about planning, discipline, and risk control. There are three popular types of trading. The first one is intraday trading, where you buy and sell on the same day and close all positions before the market closes. The second one is swing trading, where trades are held for a few days or even weeks. This is a good option for beginners who do not want to sit in front of the screen all day. The third one is long-term investing, where you hold stocks for months or years and focus on long-term growth instead of quick profits. The stock market moves because of demand and supply. When more people want to buy a stock, the price goes up. When more people want to sell, the price goes down. Market movement is also affected by company results, news, global events, and human emotions like fear and greed. Now let's understand some basic trading terms. A bull market means prices are going up. A bear market means prices are going down. Support is a price level where buying pressure is strong and prices usually stop falling. Resistance is a price level where selling pressure is strong and prices often stop rising. Stop loss is a fixed loss limit that protects your trading capital. Professional traders never trade without a stop loss. Risk management is the most important rule in trading. Never risk all your money in a single trade. Always decide your loss before you enter a trade. A simple rule for beginners is to risk only 1 to 2% of your total capital per trade. Remember, trading is about survival first and profit later. Most beginners lose money because they overtrade, follow tips blindly, trade without a proper plan, and let emotions control their decisions. Successful traders focus on discipline and patience, not on fast money. Trading is a skill, not a shortcut to get rich overnight. Learn slowly, practice on a demo account, and focus on consistency instead of daily profit. If you master discipline and risk control, profits will come naturally over time. If you found this video helpful, like and share it. Subscribe for more trading and stock market education.